All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Lots of stuff out there. Nothing really shifting its trend or changing course. More things continuing or confirming different things that we've talked about. We're going to go out and make a trade here, not for the challenge, but for the vibe. Okay, we're going to go buy some Nucor. We're going to go buy some Nucor calls for the vibe. And the ones that we are looking at here are the just regular monthlies, the Januaries, okay? The January 52 and a halves. And we're paying about 80, getting about 85 cents real value, about 50 cents fake value here, which may seem like a lot, but most of that's in time decay. We still have about 24 days. That's not really going to kind of affect the trade till next week. And the delta on this is good enough. And with the way that Nucor moves, it's not really a high risk type of proposition here from a time decay standpoint. It does have a pretty aggressive delta. These will pay off fantastically. If we start to hit our price target, they will erode quickly on weakness. Okay, but we're going to go after 15 for the vibe. 15 of these January 52.5 calls here. I'm going to put a 131 limit in. See if we fill it here. You know, we may not. Anything in the 130 to 140 area is about where I kind of price these out from a risk reward standpoint. Okay, it's kind of where we looked at those. I'm going to come in here. Let's see here. Not filled at $1.31. Let's see what's going on. Bid ask looks like it bumped up just a little bit. One anywhere 130, 140, they're pretty good. I'm just gonna give it a quick second here. Let's let's just bump this up to 134. I'll get it filled. You should probably get a better price than 134, but we're in there at 134 for the vibe. Okay, this is not for the challenge, but rather for the vibe. Yeah. In at 134, and we're just simply going to use the 7-day moving average as our as our uh, as our guide here for this trade. This is something we expect to be in for 2 to 3, maybe even a little bit longer weeks. Okay, but here's Nucor. Let me kind of show it to you here. We have it from a trend rider standpoint. We have a nice trend rider bull here. Does this signal necessarily, because it's today, mean anything? No, not necessarily. I mean, we could see this thing dip back here to about 53. We like that it broke above this 53 and actually has set a little bit of a higher high here. Okay, we've had good volumes overall. We have really nice fundamentals, but if you look at it even from a vibe standpoint, we have a bull vibe signal in play here. The moving averages on a lot of these steel stocks simply started to become tied up over the last several months. Nucor has had that. It's had its pullback back down to the 50-day moving average. We mentioned some of the bad news that it had where it whipsawed all the way back. We saw buyers holding the 50-day moving average. Now we got a sign, hey, we're ready to move. We're ready to go. Now it is the holiday season, okay. So to see this thing, move around the 53 level for the next couple days, it could happen. So our stop isn't real tight here, okay. Our stop isn't real tight. We're dealing with about 40% risk on this trade, but we're also dealing with a major delta. The way that these things these patterns have gone this year, they've gone and set new highs. We expect this to go into the 56 to $57 range, and up around 56 $57 we're looking at a 350% gain on the options if we do get to those levels. So we're willing to take about a 40% risk for that heavy reward potential that the option that we were able to get into offers us. Okay, again, this is for the vibe. We got into Nucor. Okay, we got into Nucor for the vibe. We got into the 52 and a half calls, so a little bit in the money. And we got those for $1.34, 15 contracts. Okay. All right. So we bought 15. Let me just type it in here. 15 NUE calls at the 52.5 January strike for 134 for the vibe. Okay. For the vibe. All right. Let's go take a look at some of the other things in the market here. Some of the things that are going on. Let's take Boeing. Let's start with Boeing here. And in Boeing, talk about insignificant action today. Incredibly insignificant, the overall action. As far as it's up 20 cents, down 20 cents, just doesn't matter. But I want to show you Boeing here from an hourly perspective because this is very similar to some of the stuff we're seeing with FedEx, some of the stuff we're seeing with UPS. So we looked at some of that this morning, where we're seeing very bullish action, where we kind of start to get these December dips, okay, that are kind of the lows continue to get higher. We break out above our resistance point, this 135, 136 area. Now Boeing broke out of it on some really good news, stock buyback, and it broke out of it. It pulled back a little aggressively, but then shot up on great volume, which tells us that was just an overreaction. Okay, this great good volume shoot up here was on the Fed. We got into it here. We consolidated a little and then started to march higher. Now Boeing has this kind of 136 that was resistance. Now is its support area. So, so far this week, it's just kind of settled in here around support. Would be really nice to see it near the end of the week, march into the 137.5, 138 area, start to set a new short-term high. But 136 is about where we need to hold on here on Boeing. And this is a very similar chart to FedEx, okay, from an hourly standpoint, right? Where we have this 140, 141 breakout area on the Fed, comes back down, retest it, now marching up, okay? UPS, very similar. Didn't quite come all the way down to 103 today. It's kind of just marched a little bit higher, okay? So very similar charts kind of across the board there. Yeah, Steve, market's open till 1 o'clock Eastern today, correct. So another, 52 minutes here? Another 52 minutes? Now, we've talked that we were looking to potentially pull off a few Boeing contracts and get into a few Tesoro contracts. We weren't sure whether we were going to do that today or tomorrow. We're kind of looking for Tesoro, best case scenario, to come down here into about the 57.50, 57.40 area. We get down into there, I'd really like to do it, or break back above 58.5. Okay, so we're either buying a pullback or buying the breakout above 58.5. We're kind of in no man's land right here. Okay, with Tesoro. And while I'd like Tesoro higher, okay, while I'd like Tesoro higher, we could definitely get into it here today. All honestly, Boeing's chart is more bullish. From a trend, fundamentals, you name it, Boeing's chart is more bullish. Doesn't mean Tesoro's not. We would like to get into Tesoro, but we'll probably wait until Wednesday, or excuse me, until Thursday to do that. If we get a little bit more of a morning pullback on Tesoro, we'll look to make that trade happen. Okay. Look, overall, there's not a lot of change in the market, okay, today. Stocks that were bullish, okay, some of you are riding Alcoa. They remain bullish, okay? Things like AKS, right, in the steel group, remain strongly bullish. Has gone up, has hit $8. That's about the price target here, but the strength is so great that to keep going, it absolutely could. Okay, I do think we start to see a little rotation into Nucor. We see the surge in AKS. We see the surge in U.S. Steel. Nucor's been a little bit of a laggard, but now showing, hey, ready to kick up and ready to move there. So what's been bullish continues bullish. Take a look at something like Huntsman. Okay, you're just looking at a beautiful upward trending chart. DuPont, okay, same type of a thing here. And notice how much it's moved on no volume. Okay, a lot of people will say to me, well, we don't really want to be in trades over the low volume periods. Well, you could say that, but you own DuPont. Yeah, it's low volume. Yeah, it may snap back and go back below 63 because it was a low volume surge, but you're in call options on that. You still feel every bit of those gains. AKS, you still feel every bit of those gains. And so, to stay away just because it's holiday time doesn't always make a lot of sense there. We continue to see small caps outperforming here today. Okay, they're outperforming. We're continuing to see the momentum in the banks, the KRE. I really like the Bank of America chart as far as going higher here. I would love it if we got to 15 and a half and started to see buyers step in at 15 and a half. I got an email earlier today asking about Bank of America and why it was lagging things like Goldman, okay, things like Wells Fargo, and JP Morgan, okay. And Bank of America has lagged on a relative basis over the last several days. But keep in mind the surge that Bank of America made back here in November, where it outperformed Wells Fargo, JP Morgan, Goldman Sachs. It outperformed all of its competitors. So on a relative performance base, yes, it's not performing as well over the last several days, but it's kind of coming back in line after this outperformance here in November. What does that say? Well, that say Bank of America will probably have its day again, and it's either just a matter of buying a small pullback or starting to be a buyer of it above about 1580, 1585. Okay. Halliburton. Okay, several questions here today on Halliburton. Look, as long as Halliburton holds 50, there's really nothing bearish here. 52 is still a mark it can get to, but if it were to break below 50, that's where I'd be very concerned with it. Johnson & Johnson. This is a very similar chart to Bank of America. I would rather buy the Bank of America chart than Johnson & Johnson simply because of the heavy selling volumes here on Johnson & Johnson, but the bullish principles are very, very similar here in regards to J&J. Okay. Yeah, thoughts on TGP. This is an interesting chart here. We're dealing with a stock that doesn't have a whole lot of volume going on with it, and you can kind of see, how volatile it does have. This whole bear trap concept, right, where we're looking at basing out down here around 40. It decides to break down and then very quickly break back up. What do those things tend to do? They tend to go to new highs and they tend to continue. You basically took away all the sellers in this bear trap. And so it's a very bullish chart overall. If you look at it, even just from a fundamental standpoint, here with TGP, and it's kind of like many of the other shippers. They look expensive. They don't have a ton of growth, but they are going up as the as the Baltic Dry Index. Let me show that to you. $BDI is really at the highs for the year. Okay, shipping rates have continued to increase. And if I show you these from a weekly basis, you can see in 2013 shipping rates have gone from about 700 on the Baltic Dry to about 2,300. So it's not like these shipping stocks, you look at them and say, well, they've gone up a lot, they probably have to pull back. No, they've gone up because the real shipping rates have been rising. If you look at kind of where shipping rates are relative to where they've been, you have a strong argument for a double bottom in shipping rates and for a broken downward trend that's now turned bullish. Okay, and some of the growth in steel helps. We've seen good durable goods and PMI data and manufacturing data kind of across the world it increasing. That bodes well for shipping rates. So for something like TGP, this Baltic Dry Index bodes very well. Now you can play this with things like Dry Ships, DRYS, okay, which has had a very nice consolidation, is ripping higher on strong volume, setting a new high on the year, breaking above 4. To look at Dry Ships trading up in the $6 and $7 range early next year, not very difficult to imagine. Okay, but you have a lot of these, and they can be gambles in the sense that the pullbacks can be strong, they can be sudden. You could see something like Dry Ships pull back 5% one day and then surge the next. They are a volatile trade, but they're a trade that earlier this year, when we saw them start to surge on the shipping rates, it was okay. What happens if shipping rates pull back a little bit? What happens on their pullback? Well, we've seen their pullback, here on a weekly basis, Dry Ships. We've seen their pullback. We set a higher low and we're now surging again. This whole group strongly bullish here. Okay. I'll just show you Dry Ships so you can see where Dry Ships was back when shipping rates were at their highs in '07. Surged well over $100. So to look at Dry Ships and say, well, it's only $4, can it really get to 10? Well, we get a continued surge in shipping rates. Absolutely. Dry Ships stands to benefit very well. Now, I don't think shipping rates will go back to their '07 high. We have a lot more supply in the system. One of the things that happened is back here in '07, '08, a lot of these companies started to build more ships because rates were so high. That's one of the reasons rates plummeted. But some of these have gone bankrupt. You have some more idle ships out there. So, to get a little bit more of a surge in the shipping rates, definitely potential and on the table there. Okay. Uh, kind of going off of that, if you take a look at, you take a look at dries, you take a look at the options. I mean, these 4.5s are relatively cheap. You can even kind of come out here to June, come in here and instead of putting, $4.18 on the stock, you can just come in and put $1 or $2 here on an option and pretty much get a delta of 1 as that trades higher. Okay. Alrighty, well, that's about it here in the market. Not a whole lot, going on, per se, but things continuing. What's been bullish is continuing, and what's been bearish still not really bouncing too much, but it's not really selling off very much. Okay, with our positions, Boeing, no change here to Boeing. Okay, whether it closes up 40 cents or down 40 cents, it's insignificant here. You look at the volumes, there's none. Basically, Boeing traders have gone home. With Chesapeake. Chesapeake opened up weak here today. Opened up down about 12 cents, has reversed, and really been mounting a kind of consistent charge all day. Again, on no volume, but still in a very bullish position. And then our brand new position here for the Vibe. And my favorite thing about this is that it's triggering both a Vibe and a Trend Rider signal. We're in both modes. Okay, we are in both modes overall there with Nucor. Okay, on a Vibe and a Trend Rider. NDC, I apologize. I did not take a look at CLIR yet. Let me go and do that here with you. Okay, let me go do it with you here with CLIR. When I'm dealing with a stock that I'm just not very familiar with, generally FinViz is the first place that I come. And I want to just see what do they do. Focus developing technologies, emission control, fuel flexibility. Okay, heat transfer company intends technology. So what it really sounds like is that they're probably dealing with patents. They're probably dealing with new technology. And they're going to be a small cap. And as their technology is proven profitable, they'll go up and vice versa. From a news standpoint, there's not a whole lot here on this. You do have a kind of an opinion piece here on Street Insider. I don't like to come to these types of articles too much, but occasionally you can glean some facts out of them that you can't get elsewhere. Cost. So I'm just skimming through it here. When I see stuff like this, targeted systems to be between 5.4 and 12.8 billion in the US alone. That tells me nobody really knows what the numbers are. You're dealing with a small company. You're dealing with where the estimates aren't really that accurate. Even up here, the annual cost is 300 to 600,000 per unit. Well, that's a big difference. If this were General Electric, or if this were Chevron, or this were Boeing, you would have a much more honed in type of number. But with dealing with a generally a newer type company, you're going to get very, very wide ranging numbers here. Um, okay, the company doesn't have biotech risk of getting its product approved by the FDA. The risk it has is delta risk, how long it takes for the product to be accepted in the market there. Okay, so they're really talking about it long term in this. This here, and I would want to go do a little bit more research, but where I would go for that research, I would go to the company's website. I would go to the company's website. I would read what's going on with their releases, read what's going on with uh, some of their announcements, their earnings, when they project to be profitable, and I would be looking for a pullback. I mean, the thing is up. The thing is up almost 50% or almost 100% this month. Okay, these things pull back 30, 40%, and they look dangerous to buy at those levels. But any sort of pullback back into about the $9 area from a technical standpoint would look really good. NDC on Thursday. Ask me again about CLIR. I will know a lot more. Okay, I will know a lot more then. On the surface, there's probably not going to be a lot of data here, and this, with there not being any news here, just kind of in some of the more public news channels. I'm sure if I go to some of my other channels, there'll be more news. But with there not being a whole lot of news, I'm guessing that there is some sort of pumping going on for this stock, but it doesn't necessarily make that bearish. In fact, most pumps don't go up this much. Okay. Alrighty. Well, thanks for hopping on. Yeah, Twitter. Yeah, Twitter keeps going, right? Thanks for hopping on. Any questions, please let us know. We will be back on Thursday with you, bright and early, and our video schedule on Thursday will be as followed. We'll be on for the Open. And then I will be with you for most of the day on chat, off and on video as things come up. But then we will run the classes for the technical analysis. We will start those at noon Eastern each day. Okay, at noon Eastern each day, and we'll run those, and we'll start off with some of the real basics, and as we go, we'll get into a little bit more of the complicated there. Hey, have yourselves a great holiday, and be safe, and we'll see you back Thursday. Take care.